Hey, what's up, everyone? Welcome back to Stocks Telegraph. If you're new here, we're all about bringing you the latest updates, insights, and hidden gems in the stock market. So hit that subscribe button and don't miss out on any of our future videos. Today, we've got something super exciting to talk about. We're diving into the US stock market, but with a twist. While everyone's been buzzing about the tech sector and big-name stocks lately, we're shifting gears and zooming in on a smaller, but potentially very lucrative sector, uranium. And more specifically, we'll be talking about Denison Mines Corporation, ticker symbol DNN. Trust us, if you're not keeping an eye on this one, you might be missing out. All right, so first, let's take a step back and get the lay of the land. The stock market has been on a pretty wild ride lately, right? We've seen major gains in the tech sector, with the S&P 500 up over 23%, mainly driven by that AI boom. The economy's managed to dodge a recession so far, and investors are pretty optimistic. But hold up, while all eyes are on those big-cap stocks, something interesting is happening under the radar. Small-cap stocks are starting to gain some serious attention, and this, folks, is where Denison Mines comes into play. So let's break down what's going on with Denison Mines Corporation right now. As of today, DNN is trading at $1.88 per share. But here's the kicker. Analysts have set a mean target price of $2.92. That's a solid upside of about 55% from where it is right now. Not too shabby, right? Now check this out. The analysts are pretty high on this stock, with a recommendation of 1.08. And for those of you who aren't familiar with ratings, anything below 2.0 is basically a buy. So yeah, the experts are feeling pretty bullish about it. But let's talk about growth. Denison Mines is looking pretty solid. The earnings per share growth for the next year is projected at 44.92%. That's a nice, strong upward trajectory. And if we take a look at the trailing 12 months, we see 157.23% growth in EPS. I mean, talk about a growth story. What's more, Denison Mines has a 0.00 debt-to-equity ratio. That means they have zero debt, which is pretty rare and signals great financial health. However, here's a little twist. Denison is currently 22.3% below its 52-week high. This could actually be a potential buying opportunity for those of you who believe in its long-term potential. All right, let's dive a bit deeper into why small-cap stocks like Denison Mines are really starting to catch investor interest. With the stock market at a bit of a crossroads, where big-cap stocks are starting to face some profit-taking, small caps are becoming more appealing. Experts like Todd Rosenbluth and Tom Lee have been saying that stocks with low price-to-earnings ratios and strong fundamentals are primed for long-term gains. And that's exactly what Denison has going for it. So why uranium and why Denison Mines? Denison Mines is a Canadian company based in the Athabasca Basin in northern Saskatchewan, which, fun fact, is home to some of the richest uranium deposits in the world. Denison's flagship project is the Wheeler River Project, which holds the high-grade Phoenix deposit. Now, this is exciting because production is expected to begin by 2027 or 2028. And with the growing global demand for uranium, especially for clean energy and nuclear power, Denison is in a prime position to be a key player in the uranium market for years to come. But wait, there's more. Denison Mines is not just any typical small-cap stock. One of the things that really stands out about Denison is the technology they're using to unlock these uranium resources. They're planning to develop the Phoenix deposit using a method called in-situ recovery. In layman's terms, this is a super efficient and environmentally friendly process that uses a liquid solution to extract uranium without digging up the ground. And get this, it's going to cost just $16 per pound of uranium. That's pretty incredible because it's way cheaper than traditional mining methods. This is a major win in terms of margins. As uranium prices rise, Denison's cost efficiency will allow them to capitalize on those higher prices, boosting their profitability. On top of that, Denison Mines also has a 22.5% stake in the McClean Lake joint venture, which operates the McClean Lake uranium mill. So they're not just sitting on a bunch of high-grade deposits. They've got strategic partnerships and access to existing infrastructure, which can really help speed things up. All right, so to wrap things up, 2025 is shaping up to be a year where small-cap stocks could shine, and Denison Mines Corporation is one to watch closely. With their impressive growth figures, low debt, cutting-edge technology, and strong positioning in the uranium space, This is a stock that could be ready for takeoff. So if you're looking for a higher risk, higher reward play in the small cap world, Denison might just be the hidden gem you've been waiting for. Let me know what you think. Do you believe Denison Mines could be a strong pick for 2025? Drop your thoughts in the comments below. And don't forget to like and subscribe for more insights on emerging opportunities in the market. Thanks for tuning in to Stocks Telegraph. We'll see you in the next one.